The source of all economic damage continues to be COVID-19. We all get that because we are living within its destructive construct. But for people like Dr. Alexis Crow, who you'll see in a moment, these kind of bombshell dislocations inform their capital allocation strategies across wide swaths of the planet. How is this cohort assessing the outlook across asset classes? That's the broad framework for this conversation. And with that, I'll toss it now to Alexis with my first question. Alexis, the 1.9 trillion COVID relief bill is through, and the White House is saying brighter days lie ahead. In the special vocabulary of geopolitical investing practice, what does that mean?
Thanks so much, Nikki. It's such a pleasure and honor to be with you all. And yes, indeed, we did have, the passing of the package and President Biden signing this into law. Obviously, stocks have responded in kind. Even China's CSI picking up. Um, the OECD has doubled its forecast for U.S. GDP growth, even from its December reading upon passing of the $1.9 trillion stimulus package. It's upgraded its forecast for global growth because what's good for the US in terms of a rising tide might lift all boats with some of the major trading partners, including Canada, Mexico, and the eurozone, as well as China. And so, truly, I think, the way that the president's team has couched this is in terms of a relief package and a rescue package to be able to provide direly needed liquidity to middle to low income households, which is I think a key linchpin of the policy as we remain in the teeth of the pandemic in the United States. And so we're seeing confidence pick up across the borders again, as we mentioned. Um, Confidence measures as well as equity markets. And what I would say is, I think there is a lot of exuberance in the air, but we do still remain in the teeth of the pandemic.
Okay, and quickly before we move on, just for our audience, in case the text is what you prefer, Alexis has written this fairly long form piece on our website, Annual Outlook 2021 Silver Linings. So there's that too. And with that, I'll move on, Alexis. The number of Americans seeking unemployment benefits, it fell slightly. Um, and there is a sense that hiring will increase, etc. But still, even now, like 20.1 million people are collecting some sort of jobless aid. Um, when will the stimulus and the money inflow, when do we see that actually reflected in the hiring? What needs to happen?
That's an excellent question, Nikki. I think, firstly, what I would do, being an observer of the Eurozone as well, what I would probably do is set into contrast the American labor market from the Eurozone labor market. And here, if we go back to the last crisis, the US has much greater flexibility in terms of hiring and firing in the labor market. So is able to bounce back quicker in effect. And so we certainly saw that after the trough of 2009, after the GFC, where the US was able to rebound much quicker than the Eurozone. Um, the verdict has been out throughout this crisis as to whether or not the US or the Eurozone labor market would bounce back quicker and hence economic activity bounce back quicker, in part because we've never experienced such sudden economic stops in peacetime, where effectively, households, businesses have been put in a coma on life support. And so, what we've been waiting to be able to see is, if you kept workers in their place, i.e., furloughed, and demand picked back up again, once the reopenings happen, once the vaccines are successfully disseminated, would that have caused less scarring within the economy than total eradication of those jobs? And so, obviously, the European system, works much more toward a bigger social safety net. You had some of those partial employment schemes put in place in countries like France and Germany, versus the U.S., which some might say would be like a Schumpeter creative destruction, where you did see sways of industries axed. And so, what I would say here is, I think certainly you're looking at employers. We had a business roundtable survey come out where employers are significantly looking to be able to rehire in 2021. They're much more bullish about their outlook, the capacity to invest, given the stimulus package passing this $1.9 trillion, as well as the successful dissemination of vaccines, that's fueling hope. What I would say here is which sectors, and this is what I would say, this is where the K-shaped recovery is not just about some households, progressing out of this crisis, faster than others, but also some sectors. And so the restaurant sector is one that has actually pivoted recently where most restaurants, apart from franchises, would be classified as small to medium enterprises. And many were forced just to shut during the pandemic. They didn't have an option because serving takeaway, if that was available, was not necessarily going to make the numbers. And there was a lot of confusion about whether some of the loans were actually loans or grants. And so some didn't want to take on the leverage. Some were concerned about how long they could keep the lights on. But now, with the successive reopenings and the dissemination of the vaccine, many are saying that restaurants will start to hire again and build out capacity to address some of that pent up demand. But I would say leisure and hospitality probably likely going to struggle just a little bit until some of the fears around the multiple variants of the COVID-19 strains are quelled, and until the vaccines are successfully disseminated. I think obviously some any tourism that is predicated and reliant upon demand from overseas travelers will also probably remain a bit dormant until we're allowed to be able to lift quarantine restrictions for foreign travelers and until that becomes de rigueur again. What I would probably say is that, also just thinking about the K-shaped recovery, which companies would hire faster? What I would say is when you look at a whole survey of the companies that outperformed during COVID-19. So here I'm thinking of, some of the e-payments companies, some of the grocers. Those were a very slender proportion of the entire US corporate landscape. Where I think, we will continue to see a little bit of struggling is for some of those small to medium enterprises that had to shut and that would need to rehire and just thinking about that long-term investment. So we always learn from the last crisis. I think something the US has certainly learned from this crisis is how to address lending to small to medium enterprises.
Hmm. Since you mentioned that, you pointed to this strong and intuitive historical relationship between the level of unemployment as a barometer of the economy and the frequency of business bankruptcy. This is in your paper. What are the lessons from the past, any past crisis, that you would bring to bear on how you see 2021?
I think a key one would be just connected to the point we last made, which is that in the United States, 83% of the employment base is small to medium enterprise. So S&P 500 companies only employing 17% of the US workforce. And I think that's absolutely critical. Um, some focus on GDP growth or the markets more than they do on employment, and I would say the labor market's absolutely critical here, given the fact that 70% of U.S. GDP comes from consumption, and so it's in part due to the dollars in the pockets of the consumers, which are handed to them by wages. I think more than anything. I think critically here, as we highlight in the paper as well, this relationship between unemployment and business bankruptcy. For small to medium enterprises, usually filing for bankruptcy is cost prohibitive. And so some scholars, even Nobel laureate Joe Stiglitz and others, have looked at different solutions to be able to address that, whether you have a super chapter 11, the ways in which the government could actually potentially stand in for bigger businesses. I think, for smaller as well, I think we'll probably gain more insight as to how you can make liquidity available in the wake of a sudden economic stop, such as COVID-19. And obviously, it may not come from a virus next time, it could come from a climate related event. Another thought here is that Something that the American intellectual sphere is picking up from Europe is around the concept of what is called an automatic stabilizer. That is fiscal support to businesses or households that were in a state of economic distress correlated or connected to a recession, and the onset of a recession would automatically be able to have some sort of liquidity support without having to go through Congress to be able to pass it. So, an example of that would be, for example, the Section 8 housing vouchers for low income families to be able to afford affordable housing. You could immediately expand those Section 8 vouchers to be able to increase the provision of affordable housing for those who found their housing to be newly unaffordable in the wake of a crisis. And you would have a certain threshold, such as if GDP fell by a certain percentage amount, that those stabilizers would be kicked in. And so I think that is a positive dynamic and something that the US has learned again from Europe.
Yeah, absolutely. So, Alexis, we've kind of covered US, Europe a little bit. I'll move your attention to Asia. And you say that amidst a polarized landscape with ongoing tensions between the US and China, you mentioned that some rich Asian countries can at times be overlooked for capital allocation. What would those be and why?
Well, it's interesting, actually. I think, firstly, I would actually start off with Japan, a country on which I've written quite a bit. And what I would say here is, you had a very famous US investor piling into some of the Japanese trading houses in 2020 and making a very big bet on those. Um, these trading houses are completely enigmatic. They invest in anything from grid stability and renewable energy to oil and gas contracts across the Middle East, to infrastructure plastics. And I think these are some of the most sophisticated corporate entities in the world. And these are the types of companies that will be able to stand to benefit, even as Japan faces some demographic realities, such as an aging population, a trickle of immigration, even though some of the immigration policy is changing. Some of these companies, I would say that the Japan outbound Inc. play are very dynamic. And so I would say certainly thinking about some of those companies within Japan that are also able to capitalize on the rich culture of innovation and R&D within some of the universities, thinking about their stance in building out their business opportunities over the long term in developing Asia, building upon Japan's links to ASEAN countries, I think will be very, very positive. Japan's ties with Brazil in terms of trade ties are growing as well. So I think that's certainly one play. Another one we highlight actually in the annual outlook is South Korea. And here, when we've tracked the green Build Back Better commitments and actual dollars and plans to be able to allocate capital to a greener recovery from COVID-19, South Korea stands out significantly amongst all the other Asian countries. And Prime Minister Moon's commitment for the Green New Deal in South Korea builds upon the previous Green Deal within Green Growth Deal within South Korea. His emphasis on job creation, I think, is laudable. If you think about the extent to which skilled labor is going to be required to do retrofittings on buildings, to be able to upgrade them, I think that's also very significant. And South Korean companies, some of the larger listed companies, Kospi listed companies, have responded in kind and are being very, very acquisitory in venture capital in the energy transition space, as well as JVing with other companies to expand across into Asia. And so we find this to be very, very attractive as well. I'd also just highlight Singapore being a rich income Asian country. Singapore, in terms of economic activity, took somewhat of a knock with regard to the what I would say collateral damage from the trade war and the trade winds moving across Asia. However, I think there have been certain dynamics that have played into Singapore's hands. Some of the offset from Hong Kong has certainly led to a continued blossoming of the wealth management industry as well as even residential real estate market in Singapore. What we also determine budding and blossoming sectors will be food tech,
Mhm.
and Singapore positioning itself to be a food tech capital in the world, and as well as I would say infrastructure, not only private but publicly listed infrastructure, as Singapore moves from smart city to smart nation.
You mentioned agri-tech in India, and that seems to pop for you. Anything else that stands out in India that you're looking at?
Um, well, what I would say is, I think certainly when we meet with clients around the world, that many are long on Indian financials, so I think that's one that we continue to see. Even some distressed investors looking at potentially snapping up distressed assets. Um, I would say also just the energy transition. I think is one that many investors are keen to be able to focus on. I think by some measures, India is set to be, I think, the world's largest importer of energy within the next 2 decades. And if you think about the Modi Make in India manufacturing campaign in 2017 resulted for the bulk of the increase in oil consumption around the globe, I think is very, very telling. And so as India recovers from this recession, and needs to fuel not only manufacturing, but eventually transport, and as people move from, up that beautiful economic chain of going from pedestrian to bicycle to motorcycle to car to airplane, you'll need the resources to be able to fuel that growth and that consumption even of transport. And so I think there will be a lot of focus on India's path toward a green transition. So I think a lot of institutional capital would be need to be able to come in to be able to support those green parts of the agenda as well.
Alexis, just in closing, uh, broad framework question. Now, there are countries which are capital hungry all the time, and there are countries which are capital rich. Now, on top of that, you superimpose the effects of the pandemic, right? And then you're looking at this global scenario. Based on that framework, which are the ones that might, recover sooner? Which are the ones that might recover later? And then included in that is this point you make about returns. Returns to capital might come from basically beyond one's borders, and especially in places where truly sustainable investments are being made, which can reduce social costs, stimulate jobs, etc. So basically, closing thoughts.
Yeah, I mean, I would say that coming out of this pandemic, we've certainly had an uneven regional recovery, according to which Asia has been leaps and bounds ahead of other regions, and different factors contributing to that. Predominantly, I would say, is the success of the cultural norms of dealing with the pandemic. Social distancing, mask wearing, restrictions, and abiding by restrictions and lockdowns. And I think this has been very, very successful. It's countries that have stayed open to international travel that have suffered more as a result. And so that cultural familiarity with dealing with pandemics, I think, has really benefited Asia, especially, given everyone's frustration as the virus has sort of ricocheted back and forth like a ping pong ball. I think that that patience has also paid off. What I would also say is, China leading the pack here in terms of, just extreme economic activity for 2020, really being an outlier across the globe. One of the contributing factors to that growth has been the ability to ramp up manufacturing activity right as China began to emerge from the lockdowns. And so, obviously, manufacturing activity is not reliant upon interpersonal communications to be able to continue for the most part. You can socially distance on the job. So, much easier to recover in that sector than others. And so, that's been another contributing factor as well. And even you've seen a lot of sort of South-South trade ties with Chinese demand propping up record ramping up of Brazilian exports in 2020 as Brazil emerged from the lockdown. So that's been very successful. Um, what I would say is, as you mentioned, Nikki, this capital rich versus capital hungry. When we look at the extent to which finance is globalized and capital flows are globalized, one of the things that I think has been important, and everyone's reliant upon debt, whether it's companies, semi-sovereign entities, sovereign governments, households, um, that the countries which have a strong macroprudential status, and so really implementing things such as an attempt to reduce the fiscal deficit, inflation, successful inflation targeting regimes, moving from a fixed to a floating exchange rate, that within the realm of emerging and developing market economies, that those that have stayed close to some of those remits and then done what they've needed to do in an exceptional circumstance of a pandemic, I think will probably be better off. And so, even though they might be, I would say, sort of um, thirsty for capital, not yet hungry for capital, that those would probably magnetize faster, as well as the combination with not as being as hard hit from the pandemic. Um, I would also say that countries with a very strong domestic market will also be poised to be able to recover faster, where you've had significant increase in disposable income in the years coming up to the crisis. So here I'm thinking of a Colombia, of a Vietnam. I think would be two great examples there. Um, and then as for the capital rich countries, the thing we've done here in this situation is we've piled on a lot of leverage. And I'm not even going to get into the government debt situation or fiscal sustainability there. But for companies and households, even with low to negative real interest rates, we have significantly piled leverage on across the board. And as the late Hyman Minsky said, strong medicine has strong side effects. And so there will be strong side effects with some of the debt piles that we've piled on. But I think in the euphoria of the reopenings in 2021, that might be punted down the line.
Great. Lovely talking to you, Alexis. Thank you so much for your time.
Thank you so much.